Welcome into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates. Securities offered through Peak Brokerage Services, LLC. Advisory services offered through the Retirement Guys Formula, registered investment advisor. America's Retirement Headquarters, America's Medicare Associates, and the Retirement Guys Formula are separate and independent entities from Peak Brokerage Services, LLC. We appreciate you joining us today here on America's Retirement Headquarters. It is the home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker, Scott Kirshner, also Retirement Tax Partners. ARHQ.com is the website. Find out more about the team. The process is set up a time to speak with them. ARHQ.com. The phone number, 419-794-3030. Again, 419-794-3030. My name is Chris Swan. Today on the show, is it too early to utter the R word, that word being recession? We'll talk about how much value a financial advisor brings to the table and talk about some outdated strategies you might want to leave out of your retirement plan. All this and more. But before we dive into it, let me check in. Nolan, Scott, glad to be with you once again. How are we doing today?
Yeah, always doing fantastic. Just exciting, I think, this coming Monday. I know he's already finished everything to get his Eagle Scout accomplished, but I think this coming Monday is the official celebration announcement at our PAC 101 for my youngest earning his Eagle Scout rank. So kind of cool.
Yeah, that's really neat. That's a cool thing. That's a great accomplishment, too. I mean, there's not a lot of people that actually go through the whole process to do that. So I'm sure you're very proud, but that's pretty cool. And for me, I get exciting news. Last week, my future son-in-law and my daughter put an offer on a home, and it was a bidding war, and they won the war. So they're going to be homeowners here probably in another month or so. We'll be moving them, which at my age, my back, I don't know if I can handle that, but I'm going to have to employ my son and get him in here.
Is it still pizza and beers? Is that what the bride and price is nowadays?
Yeah,
that tells you how long it's been since I've helped people move.
And a leave and Advil and all that kind of stuff, too, for me.
Well, hopefully you get a massage into a gift card for that move, too.
Exactly.
A lot of big milestones to celebrate, certainly. And, knowing as you get older, your methodology might want to change. Not doing the heavy lifting, having other people do it. Same sort of thing as it comes to retirement. Knowing when to defer to people to help you with the heavy lifting. That is your finances. America's Retirement Headquarters. They're right here for you. ARHQ.com. Real quick trivia question, Nolan. I have a feeling you're going to know this. There's only been one president that's actually been an Eagle Scout. Do you know who it was?
It would have been. I think there was a couple. I should know the answer offhand.
Can I guess?
Yeah, absolutely.
Dwight D. Eisenhower.
Not Eisenhower, actually. The only one, according to this, is Gerald Ford is the only one who actually made Eagle Scout. So
I think I have heard that.
Yeah, so your son going to be in
remember that.
Very good company there. Myself, I was a Boy Scout dropout. We don't have to get into that. Let's actually dive into the show here. What is Social Security going to look like in the next 10 years? Here is Wharton School of Business professor Olivia Mitchell recently on Yahoo Finance.
The reality is the U.S. Social Security system already is facing insolvency by 2023. After that, full benefits cannot be paid unless the system is reformed. That's different than saying the system is bankrupt. That is, it's still going to have enough revenue coming in to be able to pay about 75% for all current and future retirees, since there simply isn't enough revenue coming in to keep the benefits that have been scheduled.
I've listened to that clip a few times. It sounds like she's saying 2023. I think she's saying 2033. Hopefully it hasn't already passed us. Regardless, it is coming soon, and the key here is that no one is going to be grandfathered in or exempt from this. It's going to affect everybody. So I have to wonder, at what age do you see your clients begin Social Security, and how many of them actually do wait until 70?
This is definitely an area where we've helped out, I think, hundreds of families trying to make a good informed decision. Scott and I have done a lot of events together where, he spoke about Medicare, we took a break, and then, ultimately came and spoke about Social Security because the topics go kind of so hand in hand together. And in fact, as a side note, if you're looking for information, maybe you're turning 65, we do have a Medicare event that's coming up here locally, going to be over at Bowling Green State University. If you want to get those event details, go to our website, arhq.com. Click on the events tab for those of you that are turning 65. But, it's in that realm of age of time frame, Scott. And in fact, if you're turning 65 and haven't drawn Social Security, here's kind of what the facts are that are out there. If we look at the facts, in looking at what the bipartisanpolicy.org website would say, is it says roughly about 30 to 35% of people draw benefits as early as possible, meaning that they start collecting Social Security right at eligibility age of 62. And, the challenge, I think, Scott, about that is what people often don't realize is that if you take Social Security before your full retirement age, you are accepting a lifetime penalty of reduction of benefits. And I don't know if you've run into people, but, what do you think people are the reasons why they're deciding to claim benefits, a third of them at the earliest possible taking a lifetime penalty?
Well, I run into that a lot because, as you well know, signing up for Medicare, you actually do that through the Social Security website, and I help people do that. I'll help them actually create their My Social Security account and then actually do their application through the Social Security website. And usually when I'm in there, a lot of people will either ask, when should I take Social Security? What do you think? What's your thoughts? What do I need to be prepared for? One of the big reasons why people that I've found take it early is, quite frankly, they say, we don't know what's going to happen. We don't know if it's going to be there because it's printed on your Social Security statement that you're right, Chris. I think it actually is on the statement. It says 2033 or 2034. And a lot of people are just saying, I'm not going to wait to see what happens. But the other reason why a lot of people take it early is because of their genetics, the health of, mom and dad. I've got one client that actually mom and dad have passed away. He even told me he's the longest living person in his family, and he's 67.
Wow.
So, advice to him would be, obviously, you might want to take it.
The thing, about that the people, I think, that have those health issues, I've heard that all the time when people come to the office. Hey, Nobleman, I've ran the break-even analysis, and I got to live to 75 before I even break even. Nobody in my family's lived that long, so I better get at what I can. Well, for a married couple, I would say, take caution because the decision that you make could very well negatively impact your survivor benefits. So for a married couple, ultimately, with one of the two of them passes away, what they're going to ultimately end up doing is collecting the higher of the two benefits in a survivorship situation. So quite possibly by that gentleman thinking, I'm not going to live that long, I've lived longer than anybody else in my family. If he has a wife that has long, genes in her family, she could be negatively impacted by him making that decision. And just like the quote that I was talking about in the beginning where they were discussing about, the insolvency of Social Security, I would agree something has to be done. The one thing is there's things that you can control and things that you can't control. We can sit here and talk Washington politics as much as we want. We can give advice on what we think the government should do, but at the end of the day, that's beyond our control. Making a decision to collect Social Security because you feel that it's going to be insolvent is ultimately a decision that you as an individual can control. It's my personal opinion for the folks that are close to or in retirement time that there may be some changes to Social Security as well, but I would not accept a lifetime penalty of reduction of benefits just because of the fact that they're talking about Social Security is going to run out. When you look at it, Scott, and we're getting together with those folks and we're running those different analysis, there's hundreds of different choices a married couple can make when selecting benefits. I mean, the decisions, they tend to be a little bit easier for single individual.
Right.
That is more like the question of, do you need the money now or can you afford to wait till later?
Yeah, and that's exactly the question I ask. When they're contemplating taking it, I'll ask them, well, how much money do you need to live on to pay the bills and live the lifestyle you're accustomed to living? Because the longer you wait, the more you're going to make. And there's a way to bridge that gap, right? It doesn't necessarily mean you have to keep working, but if you want to retire and maybe put off taking Social Security, that's where you and your team actually come into play is, how do I bridge that gap? Well, I need money. And if I'm not collecting Social Security, then where's that money going to come from? And you bridge that gap with some other resources that they might have. And I love talking about that with people and especially getting them over to you guys.
There's also the issue of taxation that you got to work into this equation. And again, I think it's one of the areas that makes America's Retirement Headquarters, where you have the financial, you have the healthcare, and you have the taxes all making decisions that how these things overlap each other. You're a great example. You're eligible to collect Social Security on the younger side, but you're still working. So even if you started collecting Social Security because of your work income and not being at full retirement age, you'd end up getting a huge tax bill on that, and a reduction for excess income under the age of 66 or your full retirement age. In fact, you might be a perfect example. I know we enjoy working together, have a good time. You might work till age 70. So
Sure,
you don't
absolutely.
need the income. You could just delay it to later and get the larger benefit.
And if my health holds out, that's my intentions. Nolan, you mentioned something earlier, and I want to clarify. I want to ask you a question because I get this question a lot. So if let's say let's use me for example. I'm 63 years old. Let's say that I turn on and start collecting Social Security right now. When my wife is of age to collect Social Security, she would get half of mine or hers, whichever's higher. But is it based on when I start taking it, or is it based on my full retirement age?
It can be based upon, again, when she starts and when you start. So the way to figure it out is in so many different numbers that are kind of going around. When you look at it with the hundreds of possible scenarios, the best thing to do is to always have a Social Security optimization report run for you. So in our Social Security optimization software, what we can do is we can take a look at, and I'll traditionally ask people when they come into the office, I'll say, what was your initial plan on when to draw Social Security? So we'll go in the software, we'll kind of put those numbers inside of there. And then we'll have the software that says, based upon life expectancy, and we can, put in whatever we want. We can change life expectancy around. What does the formula say could be the best approach, looking at the hundreds of possible scenarios on when to draw benefits? And then we can also put some different what ifs inside of there. So that question that you ask about as far as what would the benefits look like for when you drew, if you draw now or 66 or 70, how would that impact the spousal benefits, whether she collected off of your record or on his own? Would take a lot of that guesswork out of it. If you're not collecting Social Security and you're over the age 60, this is really an optimal time to get that Social Security analysis report done for you. That is something that we can print out and go over with you. If you're watching our YouTube channel, of course, we do that on Zoom where we can go over and show you the analysis online. Either way, happy to help you out. Get your Social Security optimization because you've paid into it your entire lifetime. You might as well get what you're really entitled to and not just select a lower amount because you don't feel you're going to live that long and or you feel that it's going to run out of money.
It's a slippery slope, not a slippery slope, but it's a tricky thing to navigate here. But with the proper guidance and showing you the ins and outs and what it could look like down the line can make this decision much easier. All you have to do to reach out is set up a time to speak with them. arhq.com is the website, or you can give a call, 419-794-3030. With the stock market going into correction territory as of this recording, a lot of people out there are wondering if, it's going to get worse. But wealth advisor Jason Katz tells Fox Business it's too early to use words like recession.
It's way premature to use the dreaded R word, or worse yet, the stagflation terminology. It shouldn't enter into the financial lexicon quite yet. I think we are suffering from this short-term pain, and it's probably getting a little worse before it gets better, because that's how markets move. Pendulums always swing too far, both to the upside and, in this case, the downside.
So is this an event that's more policy-related that could, turn around pretty quickly, or do you see this as something that has triggered a pullback that a lot of people consider long overdue and may continue for a while?
Well, I think everybody should ultimately kind of just step back, take a little bit of a breather and, figuring out, is the market telling us is a recession coming? So, the fears that we have right now are going on is regarding tariffs and regarding recession. But ultimately, we've been talking about the recession for the past couple of years. And when we look at this, I think there's several factors that are signaling potential concerns about an upcoming recession. One would be what is called the inverted yield curve. And I know some of this stuff is thinking about things on Wall Street. So when we look at it and we look at, plotting out interest rates, with the credit quality and maturity, you in some cases can get better rates for shorter term than longer term. A good example of that is right now you could probably get a better interest rate on a 1-year CD than a 5-year. And so when you have an inverted yield curve like that, what that means is that there is a higher probability that we could be heading towards a recession using historical times that we've seen that inverted yield curve. Number two is you have rising junk bond spreads, and that's the difference between buying a U.S. Treasury and a corporate junk bond that has, a poorer quality. And so when those junk bond rates get higher, it would mean that there's a higher risk of default. I mean, as if we head into a recession and companies go out of business, a junk bond that doesn't have high quality already is more likely to go out of business. So it would make sense that if that environment, they get concerned about those junk quality bonds or high yield bonds, that yield would be higher. You have declining leading economic indicators. So if you look at some of the forecast of future economic activity, we were kind of in a downward trend. We've got, the elevated economic policy of what's happening, trying to figure out, different things that could happen. And, a lot of this leads to the short-term volatility that we have within the market. But, again, the discussion is recession has been something that's going on for quite some time. So I think, Scott, to me, it comes back to some of the things that we've talked about in the previous segment. It's knowing about like what you own, when your time frame is on when you're going to need the money, and not making a short-term decision that can have a painful impact on long-term consequences of your plan.
I got to tell you, are we in a recession? Boy, that's tough. Or are we headed that way? It's tough to tell, but I can tell you this. I was at a local store, Dick's Sporting Goods, here last weekend, and I cannot tell you how many people were in there. It was ridiculous, the number of people in there. The line just to check out was as far as I've ever seen it, even at Christmas time. So looking at the doom and gloom and everything that you're hearing, people are still, I don't know if it's because spring's here now and people are anxious to get out and do things, but people are still spending the money. I don't know. For me to follow this is like you do, Nolan, is I'm not too proud to admit it's just like way over my head, but what I'm seeing out on the streets and what people are doing and spending money, they're surely not spending money like there's a recession going on.
Yeah, so when we think about this, again, going back to time frame, risk tolerances, and knowing what you own, it's an ability to make it where you can be more adaptive to the market. When you have a pullback in the market of 10% or more called a correction, to me, in many cases, for longer term money, it can create a buying opportunity. I had a client that I recently spoke with, and, we did his investment policy statement. And, maybe a year ago, we kind of dialed down the number that he had in his risk score. And, that led into a perfect conversation that said, hey, with some of the money that we've been defensive and conservative with the pullback in the market, since you don't need this money for a while, it's a good opportunity to kind of look at deploying some of that money now, not all of it. So our advice was to deploy some of it and using those predetermined entry points. Again, if the market pulls back 10%, here's what you do. No different than if the market goes up 10%, here's what you do. And having those predetermined entry and exit points for some of the money will help you make a more sound decision. We look at this market right now as for long-term investors as a buying opportunity. Again, if you have 5 years or longer that you're not going to need that equity position, taking advantage of pullbacks in the market, which we haven't got for a while, could prove to be a good long-term strategy on what to do with your money. And if you look at what history has shown us, if we're getting ready to go into recession, and then if you look at what history has shown us about markets a year or two after the recession has been declared, market times often are significantly higher again after it. It's that fear of uncertainty that leads up to it. So could be lots of opportunities to evaluate the portfolio, going back to, again, knowing what you own, knowing how to have exit strategies in place, and implement downside risk management in a plan that meets your individual goals and objectives, that can help you remove making emotional decisions with what to do with your money in this type of environment. So if you're worried, if you're nervous about that, I'd say that's something that let's talk about.
And that's as easy as reaching out and setting up a time to speak with America's Retirement Headquarters. That phone number is 419-794 3030, I want to draw attention to the specific way that Nolan said something out there. It was not if you are 5 years away from retirement, if there is money in your accounts you're not going to need for 5 years, because that's an important distinction, that there's money in your retirement accounts that you're probably not going to be touching for 10, 15, 20 years. And so in those regards, you can think like a younger minded investor, helping find the right blend. It's going to differ from person to person, obviously, but having that conversation, a better understanding of your risk tolerance, and figuring out how to be tactical about it. 419-794-3030, or you can go online to the website, which is arhq.com. As always, I want to thank you for joining us here on America's Retirement Headquarters. It is the home of the Retirement Guys formula and America's Medicare Associates and Retirement Tax Partners. Hope you have a great week ahead of you. Gentlemen, hope you have a great week as well. And as we wrap up, I want to leave you with the final word.
Yeah, have a great week. And just remember, when you think retirement, think America's Retirement Headquarters. We're here for your entire retirement.
America's Retirement Headquarters is located at 1700 Woodlands Drive in Maumee, Ohio. You can reach them by calling 419-794-3030 or online at americasretirementheadquarters.com. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. Investments can fluctuate and when redeemed may be worth more or less than when originally invested. Nolan Baker is not affiliated with nor endorsed by the Social Security Administration or any other government agency and does not provide legal or tax advice. Please consult with your attorney, accountant, and or tax advisor for advice concerning your particular circumstance. Annuity guarantees rely solely on the financial strength and claims paying ability of the issuing insurance company. By contacting us, you may be provided with information about insurance and annuity products offered through Nolan Baker, Ohio Insurance License Number 27787.